O'Neill, Senior Trader at Thames Capital Markets. Gerren, many thanks for joining us. Do you agree with Mr. Wiegand there that we just heard that this could be the first of many rate hikes? At what pace as well? Because this is the first big one, but then subsequently, I mean, how far out are markets looking?
Well, I mean, in terms, obviously, of the markets at the moment, the first rate hike looks well and truly priced in terms of where we're at current levels. Really dependent on Janet Yellen. I think that the markets will be looking for, really a sign from Janet Yellen that patience is really key moving forward in relation to a rate hike, because it's still data dependent moving into 2016.
Do you think they have been patient?
I think they've been patient up to now. I think that the economy itself justifies, the US economy justifies a rate hike at these current levels. If you take a look at the jobs numbers, they've been very, very strong over the past quarter. So I think that a rate hike at this point is something that we as brokers, traders want to see essentially take place.
But I mean, there's a lot of nervousness around the financial markets about this, which you say a lot of it's priced in. We've had plenty of time to prepare for it. We've been talking about it for an age. So why all the nervousness?
Well, the nervousness is the scenarios of how likely we are to see rate hikes moving into the first quarter of 2016. When the US economy is strong, is it strong enough to take consistent rate hikes moving forward? This can take a lot of steam out of consumer demand, etc. So it's really what Janet Yellen puts as a forward plan. And is she going to be data dependent? Is she going to be patient? Is she going to come out with a plan saying that by 2017 rates will be at certain levels? That in itself could be very destabilising for the financial markets, because obviously, looking at the data moving into the future, we've got China in the background, cause for concern in relation to that. So, it's very, very difficult to see exactly what Janet Yellen's going to say, and that's why the markets are obviously, at the moment, very, very tentative, because obviously of the lack of clarity from Janet Yellen herself.
And we've talked about emerging market outflows, we've talked about dollar strength, we've talked about depletion of foreign currency reserves as well in emerging markets. In terms of fiscal problems, what do you think most people are worried about in terms of this rate hike?
I think that in terms of the rate hike itself, again, is the US economy from a forward guidance perspective strong enough to take continual rate hikes moving forward? And that's where we're really looking. And the key to this decision on Wednesday will lie with Janet Yellen using the word patience in relation to a rate hike moving into 2016.
And in terms of the global economy as well?
Yeah, I think the global economy at the moment, again, very much, you can take a rate hike off the table moving into 2016 dependent on China. And, obviously we've seen September, the Fed were very close at that point towards moving rates to the upside, but they held off basically because of what we've seen take place in China. If we see a deterioration moving into 2016, is that a likely scenario again? And the answer to that question...
But the Fed aren't going to take into account foreign changes in policy, are they, in terms of what's happening in China? They're just considering their own economy.
Well, I think that China obviously is such a huge driving machine in terms obviously of global growth, that without a shadow of a doubt, China will be, form some part of an equation in relation to the decision by the Federal Reserve moving forward.
Let's, if we shift focus a bit and look at the dollar, that's been strengthening in the run-up to this hike that we're expecting. Do you think that we'll continue to see dollar strength?
I think on the basis of a rate hike, we could probably climax in relation to the dollar itself, and I'd expect to see some of the, the underlying strength come out of the dollar. I think that, weakness in the dollar moving into the rate hike is really the climax to actually look at possibly a short position on the dollar at that point.
So where's the ceiling then?
We think we're approaching the ceiling as we are currently at the moment.
There are still concerns. We talked just a little bit about divergence there. We talked a little in terms of Europe weakness, in terms of divergence, in terms of the policy of the Fed and the ECB. There's a raft of data out this week that some say could confirm recovery, but there's still a lot of slack and concern, and certainly as far as monetary policy is concerned in Europe. And how is this Fed rate hike playing into that?
Well, I think in relation to the ECB, if we take a look, obviously, at the statement a few weeks ago from Mario Draghi, that was kind of, the sort of turning point when the market started to really start to push back, because the markets didn't quite get what they wanted from the ECB. But if you're the European Central Bank at the moment, you're not going to throw everything out on the table on one particular blow. It's very disappointing to see, obviously, that the exports are still struggling in relation to Europe at the moment, given the level of stimulus that's been pumped in. But the ECB have got the tools available to essentially start to move the European economy outside what the Federal Reserve does in relation to a rate hike.
All right, Gerren O'Neill, many thanks.
You're welcome.
Well, to Asia now, and as if the pollution isn't bad enough, a recent survey shows major Chinese cities like Beijing and Shanghai are getting even more expensive to live in. While rents may be cheaper often than in the West, expenses such as education and healthcare can make quite a hole in your budget.
As TRT World reporter Tara Joseph in Hong Kong says, one of the most expensive cities explores the major costs of working in Asia.
As if the choking pollution isn't bad enough. Now living in China is